Hey guys, what's up? Welcome back to another video. In this video, I'm going to be talking about a company that's really popular and they recently announced earnings for the first quarter of 2023. And that company is Amazon. And we can see that over the last year, Amazon is up a little over 3%, which is pretty much right on par with the rest of the market. So they're not really underperforming or outperforming the market. They're basically just right there with the S&P 500. And so in this video, I'm going to look into some of the recent news that came out surrounding Amazon and then look into their financial statements to get a better understanding of the financial health of the company. And then lastly, use a discounted cash flow model to figure out the intrinsic value per share for Amazon so we can know if this is a good price to buy into the stock from a value investing perspective. And so right here, we see in this news article, it's titled Amazon Cloud Unit to Invest $12.7 billion in India by 2030. And so for those of you who don't know, India is obviously one of the most populous countries in the world, and their economy is growing pretty rapidly. And so a lot of companies are looking to seize that opportunity. We can see right here, they point out that Amazon expanding operations in India, joining the list of tech companies betting big on one of the world's fastest growing economies. In particular, right here, they point out that Amazon's cloud computing segment said that they'll be investing 1.06 trillion rupees or $12.7 billion in India before the end of the decade. And this latest investment will contribute $23.3 billion to India's gross domestic product, or GDP, by 2030, and it'll support over 131,000 full-time jobs per year. And then lastly, right here at the bottom, they point out that India overtook China last month as the world's most populous country, and they're forecasted to have the world's third largest economy by 2027. Their cloud services market is expected to expand at a compounded annual growth rate of 24% to reach $13 billion by 2026. So pretty interesting things happening in India. Obviously, they're growing pretty rapidly, and Amazon is trying to seize that opportunity just like a bunch of other tech companies are doing at the moment. And so right here, I'm going to look into their cash flow statement, their income statement, and their balance sheet. Starting with their cash flow statement, they're comparing their first quarter results for 2022 to 2023. During that time period, operating cash flow increased from net cash used of $2.7 billion in the first quarter of 2022 up to a net cash inflow of $4.7 billion for their operating cash flow in the first quarter of 2023. Also, we can see that in the first quarter of 2022, Amazon repurchased about $2.6 billion of common stock, but in the first quarter of 2023, they didn't repurchase any common stock, so they are not prioritizing returning value back to shareholders this quarter as much as they were 1 year ago. And then right here on page 4, we can see their income statement, their statement of operations here for the first quarter of 2022 compared to the first quarter of 2023, year-over-year results. Total sales increased from $116 billion to $127 billion. And something interesting to point out here is that we can see that in the first quarter of 2022, product sales and service sales were pretty much on par with each other. But in the first quarter of 2023, we can see that service sales have really surpassed product sales. So that other area of their business, like their cloud services revenue, is obviously starting to grow a lot faster than their product side of their business. And as a result, it ended up leading to a pretty big increase in sales here at about 9% year over year. And then right here, bottom line net income, we can see that in the first quarter of 2022, they had a net loss of $3.8 billion, but in 2023, they had net income of $3.1 billion. So a pretty massive uptick there, and we'll see if they'll be able to continue that momentum for the rest of the year. Then lastly, on page 6, this is their balance sheet comparing December 31st to March 31st. We can see that during that time period, total assets are up from $462 billion to $464 billion of total assets. The majority of that is in property, plant, and equipment, as we can see right here. And then lastly, most of their business looks like it's financed by liabilities because they only have $154 billion of total equity. And then of that, their retained earnings makes up $86 billion. That's up from $83 billion year over year. So if they wanted to, they do have more cash to use to repurchase common stock or to reinvest back into the business. Now we want to look at this discounted cash flow model to figure out the intrinsic value per share for Amazon so we can know if the current share price is a good price to buy into the stock. Right here, I got this metric from Yahoo Finance. They're estimating that the company is going to grow at around 8% for the next 5 years, compounded annually. Actually, when I went on Yahoo Finance, they were actually estimating that Amazon was going to grow at around negative 200% for the next 5 years. But they also pointed out that over the previous 5 years, they were growing at about 8% per year, compounded annually. So I decided to use the metric for the past 5 years as an indication for the next 5 years instead of using their negative 200% growth rate, which in my opinion didn't really seem that realistic. And then right here we can see year one free cash flow of $25 billion. I ended up using their free cash flow for 2020 as opposed to 2022, just because in 2021 and 2022, Amazon had negative free cash flow. And if you input a negative free cash flow amount into a discounted cash flow model, it's not going to output a positive intrinsic value per share. So I decided to take a few steps back 2 years and then just use 2020's free cash flow metric because that was the latest one that was a positive. Then on their balance sheet, they had a net debt position of $114 billion after subtracting cash, and they had about 10 billion shares outstanding. That puts their estimated intrinsic value per share at $25 per share, which means that at the current share price, according to these Yahoo Finance estimates, they're definitely not trading below intrinsic value per share. Right now, they're trading at around 5 times their estimated intrinsic value per share because they're at $125 per share, and their intrinsic value is estimated to be about $25 per share. Then on the right-hand side here, I did a competitor analysis comparing them to the other big tech companies in their industry from a financial ratio perspective. We can see that across the board against Apple, Microsoft, Google, and Meta, it looks like Amazon has one of the lowest gross profit margins, and they're the only company out of these 5 companies that was not profitable in 2022. They had no net profit margin, and so as a result, they don't really have return on assets. Because their profit margins were so low, their price earnings ratio is extremely high at 286 times earnings, because even though they had a couple $100 billion of revenue, they ended up having like pretty much $0 of net profit just because of how large their operating expenses are. And I think they choose to do that intentionally, but that's a conversation for another video. And then also we can see right here that in terms of dividend per share and dividend yield, Apple and Microsoft are the only 2 companies on the list that pay a dividend. Amazon, Google, and Meta do not. So based on this, it would look like Amazon is obviously lacking behind in comparison to their competitors. There's obviously a lot more that goes into analyzing these companies against each other from a competitor analytical standpoint, but if we're just focusing on the financial ratios, Amazon is definitely in last place here. It would look like first place for gross profit would go to Meta, and then overall it would probably go to either Microsoft or Apple. And to end the video off, I wanted to compare Amazon to some of the other companies we've looked at in past videos. This table right here compares their share price at the time of making the video to their estimated intrinsic value per share at the time of making the video. We can see that across the board, Amazon is coming in last place here. The only reason they're making it into 10th place is because, as I pointed out in the last video, I updated all of these metrics recently so they're fresh and they're up to date. And one of the companies on the list, Verizon, had metrics that were completely out of whack, and so as a result they ended up getting booted off the list entirely, and so the 10th place spot freed up. And so as a result, even though Amazon was trading at 5 times their estimated intrinsic value, they did end up making it onto the list. They had intrinsic value per share of $25 and a current share price of $125. So that means they're trading at around 4.95 times their estimated intrinsic value, which in this case is good enough to get them into the 10th place spot, but obviously not really that good in comparison to the other companies on the list. So far, Google, GE, Chevron, and ConocoPhillips are the only 4 companies on our list that are actually trading below intrinsic value per share. As we can see right here, this is their share price at the time of making the video, and this is their estimated intrinsic value per share. The other companies were trading at a pretty good buying opportunity, but they were not trading below intrinsic value per share. And so this is the table right here. It looks like Amazon is coming in last place there. In terms of growth rate, we saw that Amazon had a projected growth rate from Yahoo Finance of 8% per year, which is not good enough to get them onto the table here. ExxonMobil holds a number 1 spot at 26%. In terms of gross profit margin, we saw earlier that Amazon had a gross profit margin of 43%, and they don't have any net profit. So that is unfortunately not good enough to get them onto either table. Adobe holds the number one spot at 89% gross profit, and Microsoft holds the number one spot at 36% net profit. And then lastly, right here, I compared the companies against each other in terms of their stock performance over the last 5 years. We saw that Amazon has a stock performance of a little over 50%, 50 to 60% over the last 5 years. So that is not good enough to get them onto the table here. Tesla is holding the number one spot. When they were trading at around $203 per share, they were up around a little under 1,000% over the last 5 years. And we can see the rest of the companies on the list here, ending with Nike at 47% over the last 5 years. And so, actually, now that I think about it, Amazon does make it onto the list. Sorry, I completely missed that. They would make it onto the 10th place list because they have a 56% return over the last 5 years. So that means that Amazon is in 10th place, and they are able to make it onto the board here, but still not nearly as impressive as Tesla in first place with 1,000% over the last 5 years. So in terms of comparing to the other companies we've looked at, it looks like they're not really that competitive. They pretty much only make it onto the bottom of the board on 2 tables, and then on the other tables, they don't make it onto the board at all. In terms of comparing them to other companies in their industry, like big tech companies, they're also, from a financial ratio perspective, not really that impressive. And we saw from the discounted cash flow model, they're currently not trading below intrinsic value per share. But that being said, Amazon is obviously one of the biggest companies in the world. They have a growing cloud computing segment, and they're making large investments in India, which is one of the world's fastest growing economies. So we're going to see if Amazon is able to start to pick up momentum in the near to long-term future here. Let me know in the comment section down below what you guys think of Amazon. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.